Hey everyone, welcome to another session of Inside the Markets with Caleb and Brown. Today we're going to talk about what's happened in March and what we can look forward to in the month of April. So just recapping on the month of March, Bitcoin volatility was largely driven by tariffs and crypto reserve disappointment. The crypto reserve disappointment, this whole idea of a strategic Bitcoin reserve, was one of the leading narratives which a lot of speculation leading into 2025 was dependent on. We got the great news, but the news that the US isn't actively buying any Bitcoin and the other cryptocurrencies in that basket of that quote unquote reserve don't seem to be getting any further action either. That led to a lot of disappointment. The classic buy the rumor, sell the news situation unfolded there, and the market was certainly humbled. Additionally, the news of tariffs and the emerging tariff war ongoing to start 2025, it's caused Bitcoin to subside, lose its 100K mark and humble down to the $80,000 range. In addition to that, of course, altcoins have bled dramatically. We know that time and time again, if Bitcoin goes down, you can expect the rest of the altcoin market to go down significantly more. Institutional capital has returned. There is some ETF inflows and whale activity that surges. We'll get on that soon. The Fed holds rates, signals 2 cuts for 2025, macro uncertainty peaks, and regulatory activity heats up in the USA. So let's just take it back to March 2025. What does the landscape look like and what does the price look like for Bitcoin? What's the market cap look like for cryptocurrency? As you can see, throughout the majority of March, we've been fairly stagnant. Bits of downtrend, a couple of brief recoveries, but nothing really sustainable. We've certainly come down from what we saw in a rather exciting start to the year. Sentiment has improved since February lows. Improved is probably being overly optimistic. It's just not as bad and colossal as it seemed. So we had a really strong, nice looking January. February, things came down dramatically. And March, we stagnated. We had periods where the market came down, had somewhat of a V-shaped recovery, just to come back down again. We had that period of time where the announcements were drawing so much attention to the space, and we saw these massive candle, the first $10,000 Bitcoin candle we've ever seen in history, followed by a $10,000 correction the very next day. There's a lot of manipulation in the market, a lot of speculation, a lot of uncertainty, a lot of people trading with colossal sums of leverage, and as a result of that, volatility is spiraling out of control. The Fed holds rates, tips 2 cuts into the future in 2025. I mentioned last month that Fed announcements, SEC news, these were the headlines that largely drove volatility in the space. What we've seen since Trump's inauguration is they're not as critical to short-term volatility. There are headlines which take precedence over that, largely news of tariffs. What's the economy going to look like in this tariff war? Geopolitical conflict. These are the headlines that are driving speculation and market volatility. It largely impacts US tech stocks, which have almost a one-to-one parity to how they impact the price of cryptocurrency. And then, of course, gold is living in its own bull market, segregated from the rest of crypto. Digital gold in Bitcoin, look, believe it or not believe it, at this point in time, Bitcoin is not moving eye to eye with gold. It is just seen much more like a risk-on tech stock. That's how it's been behaving. So look, we'll see how Fed rates impact the market over the course of the year. It does seem to have a dying impact, and a lot of it seems to already be priced in. Whales accumulate Bitcoin. Time and time again, when the market is in colossal degrees of fear, you can see the fear and greed index, and we're in that real fear period. That is when you see a lot of Bitcoin accumulation. Smart money buys when everyone is bleeding, and it tends to sell when everyone is gloating about how successful they've been as a cryptocurrency investor. What we can see here is that Bitcoin accumulation is starting to come back. It hasn't reached the wild peaks that we've seen in the past, but it's starting to give a lot of momentum. Maybe Bitcoin is being seen as a longer-term safe haven. Maybe it's an alternative investment that traditional investors are looking to gradually get some exposure in while it's sub 100K. ETF outflows were a serious issue for the later parts of February and leading into the month of March. We did see it stabilize though. So we started to get inflows again. Things started to look a degree more optimistic in the sense that maybe the majority of the pain, maybe the majority of the selling is already behind us now. It's very difficult to tell because we're in a market right now where sentiment can shift on a daily basis. We saw with the $10,000 wicks on Bitcoin last month that the market can go from everything is golden, we're going into a bull market, to everything is destroyed, sell everything, get out of cryptocurrency the very next day. Outflows are generally more of a sign of smart money. It's more conservative, traditional money getting exposure to Bitcoin, Ethereum, and in the future, hopefully more cryptocurrencies with ETF functionality supporting them. We'll see how the year goes. So what we have here is the Economic Surprise Index. It's reached a low despite uncertainty. So in simple terms, this index principally looks to see if economic data and market expectations are reconciling. So things like GDP, job data, how is that comparing to people's expectation of what the market ought to be doing? What we see here is it has not been performing well, which largely means sentiment is negative on a broader economic landscape. People are more concerned about what the future is going to have relative to the reality of real live inflation data, GDP data, jobs data, and the like. It's critical that we look at these kind of slides because cryptocurrency is a risk on asset, meaning it's largely driven by sentiment and speculation rather than principal foundational long-term investment strategies. Whereas a lot of other assets out there have a different investor audience. People who invest in cryptocurrency, it's a 24/7 market, so you're constantly looking to try and have that edge to get the best outcome for yourself. Now, if globally we're not seeing economic outlook which is favorable, then people are going to be more inclined to take a conservative approach to their investment thesis, which means that things like cryptocurrency are going to be really hurt by these kind of indicators because you're going to sell your cryptocurrency probably before you sell your investment property or your gold or your silver, whatever the case may be. So it's always important to look at this to get a gauge of what sentiment is looking like and what the future may hold. Now this slide here, Ethereum, probably one of the most disappointing and anticlimactic cryptocurrencies of the last 2 years. While Bitcoin ended up soaring to new all-time highs, we saw Solana make a complete recovery back to its previous highs after down over 95% for a period of the bear market. Ethereum just hasn't really gotten anywhere. It's stagnated between the 2 to 3K range for most of the last 2 years. It got over $4,000 briefly in the November pump of 2024, but relative to the performance of Bitcoin, people would have been expecting Ethereum to be close to $10,000, not trailing its previous 2021 bull market highs. Is the low finally in? There's a few ways you can look at this. We are seeing accumulation off Ethereum. We are seeing some degree of price range stability. It's not getting the same degree of sell-off that altcoins are getting, but it's certainly being sold off more than Bitcoin, for example, in times of negative market sentiment. You could argue that because it's been so stagnant, maybe it's found its kind of local bottom and maybe there's a better future ahead for it. But with the lack of innovation and headlines and excitement around the Ethereum community, it has allowed other competitors like Solana and Sui and many others to start to get the spotlight and build their market cap and eat into that market share. It'll be curious to see how the year ahead goes because Ethereum is largely seen as one of the stable blue chips of the crypto space. Trump is a large proponent and has a large exposure through his businesses to Ethereum, so that could be rather optimistic. But as it currently stands, this coin does not look overly optimistic, and a lot of people, including myself, have been quite disappointed over the years. Looking further ahead into the month of April, which we've just started, Trump's tariffs, in the next 24 hours, we should get some major headlines. The Liberation Day, or whatever it's been coined across media outlets, the reciprocal tariffs, the changes in them, the speculation about them, that is driving more volatility than any other factor or indicator or headline in the space. So tariffs is certainly the focal point. It does not really matter how great or terrible a cryptocurrency project is right now. The tariff news will be the biggest impact on their price. I'm excited for the month of April. I'm nervous for the month of April. I do believe that a lot of the fear has been priced in, but even after we get these announcements, even after we have clarity on the tariff direction for 2025 and the rest of Trump's presidency, we still are going to have that uncertainty of what the flow-on effects to other economic indicators are going to be. US Fed rates decision on May 8. I mentioned previously that the headlines of Fed rates, SEC headlines, they're not impacting the market as much as they did in the past. because a lot of investors are seeing news of geopolitical conflict and tariffs as being the leading indicators of what the world of tomorrow is actually going to look like. So I'm not expecting there to be tremendous volatility surrounding this, particularly if what is already priced in and expected in the market to be announced is in fact what's announced. If there are curveballs and things change, no doubt that will cause volatility, but for now it is tariffs, tariffs, tariffs leading the way. A few other developments that we have here. US SEC crypto roundtables, April, June. We should get some better clarity on what the US regulatory future of cryptocurrency looks like with this. US crypto legislation, stablecoins, and securities clarity. This is critical. It's something the space has lacked for so many years. Ethereum's upgrade timeline, do with that as you please. I think Ethereum has got to do a lot more if it really wants to kind of win back the enthusiasm of its audience. And liquidity trends and macro rebound signals. There are a number of indicators and economists out there saying that we might be in for a rebound. Maybe the sell-off is completed. Another core one is liquidity trends. If liquidity is increasing historically, there has been degrees of parity between Bitcoin's price performance and global liquidity. Look, past performance is not a guarantee of what the future is going to look like, but these are indicators that can give us a degree of optimism. At the end of the day, we have a lot of major changes in the world on a geopolitical and economic front that has major flow-on effects to cryptocurrency industries and these tiny altcoins, which are so susceptible to sentiment and volatility shifts. We'll see how the month of April goes. Hopefully next time I do this video, we have some more clarity on what the future is going to look like, and hopefully most of the pain is behind us. But we will see. Never a dull day. Until then, thank you.